facts from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in at January 24, 2022, and I have a warning for the market this week. We have talked about it a lot. This has been the worst start to the year, or even the worst market performance since March 2020 when the pandemic started, and now we are getting the big tech earnings this week. Apple, Microsoft, even Tesla, and a lot of even industrial names like Boeing, IBM, and all of that, but you are getting Jerome Powell, and what he either confirms or denies on Wednesday, it will have a lot of implications. So we've waited a long time for this week. It is finally here. There's a lot of data, but the volatility is not over, and we will see by Friday. We are either going to see a huge shift in growth, or the market may be a little bit of patient and we see a little bit of normalcy return. So let us not delay. I'm not going to waste any time. I have a huge watch list. We got to go over plays that we made from Friday. I went over a unique strategy regarding puts. I just want to show you that one. Then we need to talk about all the different events. I got a bunch of pretty pictures and just what we should expect from the Fed and how to move forward. So drop your thumbs up on the video. Make sure you subscribe. Tomorrow is Monday. Post that random play to keep it going. And if you don't know, we are live Monday through Friday, 30 minutes for open, youtube.com/the stock market. We will see you there tomorrow. You're not going to want to miss it, especially on Wednesday. But right off the bat, like we said, this is one of the worst stretches that we've seen since March 2020. And I'm even going to take you down here to the first pretty picture. Yes, we are getting a bunch of data and there's a lot of events, but also right now, you got a bunch of technicals and just the volatility. And right now, the market has been oversold for the first time since March 2020. So first time you got that trigger, it still lasted a little bit. So point is, you're going to see volatile markets for the next coming weeks, but what we get from tomorrow or even Wednesday, that is really going to decide the trajectory. But right off the bat, if you've been watching crypto over the weekend and everything, everybody on Monday, we really want to see, do we see this big volatility? And then what sort of foot do we get off to in the morning? But that's the first part. As far as the main events for this week, you are going to be getting the big earnings, and this is going to be important. You're going to be hearing from Apple, Boeing, GE, 3M, Deutsche Bank, Microsoft, and Tesla. There's going to be a lot of other companies, but these are the bigger market cap ones that will have a lot of importance. But whatever happens with Apple, Microsoft, and some of these big tech names that still have a lot of cushion, that is going to be the main focus. And then on Wednesday, when we get Powell, there is a lot of confirmation or denial that will occur. We'll get down to that. But the main thing I want to highlight with all of this, you got your two things with earnings and the Fed, but then at the same time, we're going to be getting a lot of central bank action from a bunch of other countries. The main one is going to be Bank of Canada. And why this is so important, because they are not expected to raise, but some people are talking that they might. And then some of the other Latin American countries, they are all raising rates too. So depending on what we get from Powell and what he signals, these other central banks will be important. And that is on Wednesday. And then also on Wednesday, you're going to get crude inventory. So oil has actually been one of the only assets that has been going up this month. So where we go from there will be key. And then you're going to be getting the fourth quarter GDP, initial jobless claims, and durable goods orders on Thursday. And then on top of that, on Friday, you get consumer income and consumer sentiment. So why is this so important? One, the main priority will be the Fed. Then it's going to go down to earnings, mainly Apple and Microsoft, and then Tesla as kind of a side play. We'll talk about that. Those are going to be the most important things. But then any of this other data, people are worried about slowing growth right now. So this may be one of those moments where the data may hit a little harder. And then on top of that, I forgot to put it on here, you are going to get the PCE on Friday. So I hope you're ready for all of this, because it is going to be a wild week. We have two big catalysts, and then you're going to have a lot of data that should be a little bit more important. So we already went over this pretty picture. Watch out for just the volatility in general. This is something we saw last week where the market doesn't necessarily have to respond to stuff. If we get any of those sell-offs like we saw at the end of the day, that goes beyond the data. So watch out for that. But now as far as Powell, we are going to find out what he really thinks about all of this volatility. Essentially, even Goldman came out with a report, and they're saying that he is going to pound home the March rate hikes and even leave open the door for half a basis point raise, which is double hawkish. But essentially, this is going to be the meeting. If he says, yes, we're hiking in March, and this is the plan to cut the balance sheet, and he kind of sounds just as hawkish as the minutes do, but even more, then you're probably going to see the market react a little bit more. And why I say a little bit more, because this is what people have already been worried about. So we will see. But then again, the market may double freak out trying to make him force his hand. But otherwise, if you don't get the real March confirmation and he doesn't come out as a super hawk, then he might walk back some things, and the market still may get pissed, because this is what we talked about the other day. You don't have to look at TLT, but given if you've been watching some of our lessons here, it should make a little bit more sense. Essentially, if he comes out super hawkish and confirms that, again, you can see how the bonds really haven't moved here since that first move at the beginning of the year. And remember what happened? People were worried about Powell being hawkish. So if Powell confirms hawkishness, TLT should go down, and this would be now higher rates and people more worried about how that would affect in terms of responding to inflation, and essentially higher inflation. Again, a lot of people are tripping out, and they're even saying stuff, whether it's real estate or even tech stocks. Again, yes, some things are bad, but just remember, at the beginning of the year last year, the rates were actually higher. So thankfully, the bonds have held up in a level, but you could see they're waiting for that next move. But essentially, if Powell's more hawkish, TLT should go down. But then if he does walk it back, why I'm saying the market may get pissed, because then they may start pricing in policy error, and then the long end of the curve will go down, TLT will go up, but then the short end remains the same depending on what he leaves open. So there's going to be a real battle here, and that's what we're going to be watching for. But essentially, Powell has the opportunity to pivot, and if he doesn't pivot, we're going to see what the market really thinks. And was this enough of a reaction, or will the market try to pressure Powell a little bit more? So this is going to be big, but either way, Wednesday will be a big turning point, and you'll see where we are by Friday. And just keep in mind the levels that we're at now, because right now we are in no man's land. So speaking of no man's land, we talked about this a lot on stream, and this right now is going to be one of the battles until we get the economic data or Powell. But right now, the S&P on Friday, it did close below the 200-day moving average, and that's another one of those things that you have not seen since March 2020. But now, as far as the buy the dip is concerned, this is going to be the secondary battle taking place in the market this week. People are debating of, do you buy the dip at the 200-day, or do you wait for a full 10% correction? So that is about 430 flat on the S&P would be a 10% down. Otherwise, right now at like 436 or 440, that is the 200-day moving average. So this is going to be another battle or a decision people are going to make, and hopefully earnings in Powell will confirm that. So coming into one more final pretty picture here, again, depending on what Powell says, we are going to see what happens. But if he does kind of confirm some more hawkishness, I wouldn't be too afraid, and that's why I'm saying we got to see how the market takes it. But here is some historical performance of how the S&P 500 has done during Fed rate hike cycles, and this just highlights what people will start talking about, and this is already coming up in the analyst community, so we'll see what happens. But what you notice, the only time you've seen a negative reaction to rate hikes, and it was aggressive, that was 1972 and 1974, but other than that, the market has actually performed good. So we will see what happens. But finally, I just want to make this clear, the Fed will be key, but just don't forget how important those big dogs are going to be, because right now, like I'm saying, with the oversold, undersold, everything else going on, investor sentiment is key, and depending on what those big techs report, that could determine a lot. So coming into the company news and events now, this one, I'm starting off with this just because a couple weeks ago, when there was a lot of volatility, Kohl's kind of ignored it, and it was all due to this buyout. So over the weekend, there was news that Kohl's has fielded takeover interest from two different suitors. They got a $9 billion bid from Starboard, but now there is apparently more offers. So we'll see how this one plays out tomorrow and how it does. And some people are mentioning Kohl's real estate position as a driver for the deal. So keep that one in mind. And then the United States, you got a lot of Russia baby mama drama this weekend, but there was some updates. The U.S. decided not to issue sanctions on Russia just yet, saying that if they did it now, it would lose more effectiveness in the future. And then now there are also some other reports that the situation may cool down until the Olympics is over, because Xi Jinping, the president of China, does not want a global security risks affecting the Olympics. So they got a good relationship there with Russia. We'll see how it plays out, but some people are saying until the Olympics are actually over, you will not see any more offensive moves. So we'll see how that one plays out. And then Citi, they are now urging their bank staff in New York to return to office early next month. So there was a couple of updates there from Fauci and people saying Omicron peaking. So we'll see how that comes into play this week. And then Intel, they were praised again by President Biden for the new chip plant. That was announced on Friday. It was like $52 billion in Ohio or something like that. But then Biden also made another plea to Congress to pass the stalled chip bill. So if you remember earlier last year, they wanted to do these chip building bills or these bills to stop the chip shortage, but apparently that got stalled with everything else. So we'll see how that one plays out. And then finally, this was the news from Friday, but it got a lot of headlines over the weekend. But MSTR, no one knows what they do, but they got news on Friday that the SEC has ruled that they cannot strip out Bitcoin's wild swings from their unofficial accounting statements. So there's GAAP and non-GAAP, but essentially the SEC said your non-GAAP is like ridiculous. So no, you can't do that. But we will see what happens. But overall, there was a lot of news about crypto dropping on the weekend. The same volatility we got. People looking at the comparison to March 2020, a little bit of Ukraine, but now all eyes are focused on earnings and Powell this week. And really, we're going to get a lot of this story and how the rest of the year is going to play out. So I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got a bunch of different plays that I'm looking at coming into tomorrow. I have plays on some of them. We got a bunch of old plays that are clapped for pre-earnings. So if we do get saved, that will be great. But other than that, I want to go over the put strategy as well as just overall respond to the market and what we get. But we talked about this on Friday. You got a couple of options here. You're either going to take it slow and not force anything. But other than that, if you want to go for these plays, they're still willing to move, but a lot of them are undesirable. Essentially on Friday, I took a lot of plays that I didn't really like, but instead I kept a small amount of money instead of playing bigger. They all hit because they were puts, but it was still very difficult. And essentially, I want to show you a little trick here that may make it a little bit easier, but you got to make the decision and understand in the middle of this volatility, it is extremely wild for options. As far as equity, though, we had this talk on Friday. I mean, I'm still ready to buy the dip. We got a long-term deposit on the way, and really, there is a lot of deals, and pretty much by the end of this earnings and Powell, we should really get a big idea of what's going on or really what sort of range we could be comfortable with to buy the dip. So keep that all in mind. But as far as the first play, I'm going to be watching Tesla and MSTR. So these are going to be key to watch this week, especially after Tesla earnings. Elon Musk did announce that he will be giving a roadmap on the earnings calls. Remember, he said he didn't really want to be on them, so that may be a positive catalyst. But either way, Tesla and MSTR, I think it's really going to confirm or deny more of the growth capitulation. So MSTR doesn't have earnings. I want to see how the Bitcoin collapse affects them. Again, remember, Tesla has some Bitcoin too, so that's part of the growth slipping. But essentially, after Tesla's earnings, if it is not good enough for the market, that may be another one of the victims we may see in this growth collapse. So we'll see what happens, but I did play both ways on Tesla. So as far as the play I grabbed this week, I mean, we grabbed it on Friday. It was for next week, so this covers earnings. It's closer to the money. I got a $7.50 put. I only spent $1 on it, and then it did shoot up here in value. We made one of them free on Friday, and this is where I'm saying here, I mean, the Tesla options aren't too bad because you could kind of see how they've been cheaper over some time, but that is really just the theta and time decay. But these contracts moved up a lot. I only grabbed this play to protect myself during the volatility. Like I'm saying, even at like 130, they were a little bit more expensive again from the day before. But with how Tesla was trading by the end of the day, I sold off like 2 of them, made them free, but decided to hold this one. And then I grabbed a contract with more time. And then I went for the March 1400 call. So they're a little bit out of the money there. They're not going to be the same. But the real thing I like about it is simply the time. So we're going to see again this contract. I mean, it's already at the bottom. And this is one thing I did like about the Tesla calls, because if you looked at like Microsoft or Apple and you even go out to March, some of their calls are actually holding the same prices. So the Teslas have actually decayed. That's what I liked about it, but they have earnings. So essentially this is a pre-earnings play. We will see how they play out, but I'm definitely going to be watching them. And then as far as MSTR, I went with a pretty crazy play, and just because MSTR really got clapped on Friday, it kind of looked like Shopify if you remember, but I decided to go for the February 11th 220 puts. I only bought one, and I think I got it 260, and then pretty much the spread made it go crazy. This one, there's nothing with the premiums. I was just playing the news with the SEC and the accounting standards, but then again, it just started to make more sense with this collapse of growth, but now especially Bitcoin. We'll see how it plays into the weekend. I think this might be a good volatile play, but the spreads are wild and it is very hard to hit. But essentially, this is a piggy bank, or this could be now one of those areas where the growth collapse kind of spreads in. It spreads in other areas, but now you're starting to see it hit certain names. So that is the first play coming into the second play. The next one is going to be Morgan Stanley, and essentially they have been a leading bank this far, but the puts were essentially cheaper than last week. So if you remember on Friday, I was going over a bunch of different plays, and this is what I'm going to show you. We had a bunch of them. We played the Disney, we played the AMD, the IWM, the Tesla, and all of them, but most of those puts, they were a little bit more unfavorable. In this case here with Morgan Stanley, since they did good at earnings, you could see the puts did go up on Friday, and that was kind of the whole unfavorableness that you kind of had to deal with. But for the most part, these puts were a lot cheaper than what we've seen with a lot of different names. So essentially, instead of buying a put where you've had a lot of premium, I'd rather get one of the leaders that has already ran up, and now the put protection is cheaper. The only negative part is they are a leader, so people have been buying and holding them for a reason because they've already had earnings and did good. But essentially, if we do continue to get risk off, I would not be surprised to watch Morgan Stanley and some of these other leaders fall. So that's kind of the whole idea with the play. That's the second play. And then finally, Apple and Microsoft. They are going to be important earnings reports, and really, I want to see if we would be able to play both ways. The thing I don't like about it, Apple and Microsoft, since they've kind of moved a little bit weirder in the last few days. Some days, Apple would only be down like 0.25%. Microsoft would go up 3%. The premiums are in a weird middle, but the idea here is Apple and Microsoft, there should be a lot of movements, and now with earnings, people are really going to focus on them, so I think it's going to be a good opportunity, but watch out for them. I'm only holding calls, so the idea would be to get some good puts, but I may even be down to get a couple more calls as well, so no other play besides that. As far as everything else, I made a bunch of other plays on Friday, and I want to show you the ones that I'm still holding as well as the ones that I sold out of, but this is exactly what we did on Friday. Again, I started going for these weekly options. I ended up flipping out of half of them, but the ones that I played a little bit smaller, I was willing to hold for a little bit. So one of them here was the December 125 puts. You can see we're up 100%, but remember, this was the post-earnings continuation from Netflix, and I got this play after I flipped out of the Netflixes. So I'll go to the Netflix afterwards, but essentially what I'm going to try to show you here is that if we do get more volatility, you're going to see contracts literally up 740%, anything crazy like that. It's like if you really want to play them, I've been going smaller, but at the very least, don't get caught buying into the high. And what you'll realize, we got the Netflix on the first run up. Disney was already going. I had to wait about an hour or two, but then I bought these, only got 5 of them, put $100 in. We got them at 20 cents. They went up to 100%, but this is what you need to look for. So pretty much what I'm trying to tell you is that if your relative pricing, if you're looking at these contracts and you're like, okay, yeah, these contracts were going for 30 cents or 10 cents, 5 cents, why would I buy them up here? But then you see the market being volatile. At the very least, if you're going to go, and especially this was a short-term contract, so these ones, I'm not willing to hold them if I have a lot of money in them. And even with that same logic, you don't want to pay fat premium on the shorter terms. Essentially, just wait till they come down here. So that's what we did on that one. As far as the Netflix, I grabbed the 330 puts, and then you'll see what I'm talking about here on the option chain. I mean, look at it the day before. They had a killer earnings there, right? But essentially in the morning, the premiums were high. Then the 3 or 4 minutes, they had that drop. I was able to buy 3 of these for 62 cents. They started shooting up. Again, short-term contract, but they had the juice there because of the earnings. Remember, Netflix earnings was wild on Friday, but I grabbed 3 of them for $180. Again, less favorable. The play went from 14 cents to 60. That's massive premium, but I got to buy it here towards the bottom. Didn't end up paying the dollar. Got 3 of them, sold 2 of them out at $1.80, and then I think we sold the last one out at like $2.70. So I completely got out of that play, but you could see here, even on the day of volatility, bad earnings, there's still opportunities. You just got to be a little bit quicker there, but also I keep them small because you never know. You have seen us get washed by some of these plays, but the idea is if you're going to go for the unfavorable contracts, you don't want to put too much money in, but try at the very least to get it more on the downside than buying into the upside premium, because when people get freaked out, out, the premiums really start to launch. So that was the first play. Coming into the next play that we did, this is another one that we closed out of. Pretty much same logic. I went with IWM puts, and I bought 5 of the 187s for about like 50 or 66 cents each. Oh wow, it was on January 26th. The 187s right here. Again, we got these at like 50 or 60 cents here, I think, towards the bottom after they dropped. Again, they had the morning run up, then they came down, and when the volatility was looking to come back, again, we've seen these moves where the market just starts to sell off towards the close. I grabbed 5 of these, $300, got them at 66 cents, and again, by the end of the day, I ended up selling out of all of them. We got about 100%, as you could see. They even closed up good, but again, just focus on here if you're going to be buying an undesirable play. Again, this was going for 25 cents the day before, like 40. I was still paying a premium. It really wasn't the best contract I could have bought, but you see how in the volatility they were able to move. So there was that one. Again, I am taking profits, as you're seeing. I'm holding some of the smaller ones, but that's just going to be the game of musical chairs here. And then there was the AMD. So this one was kind of towards the last one, pretty much in like hour, 2-hour intervals as the market started to move. I went after these plays, and I did not know the spreads went that crazy, but I grabbed 30 of the AMD January 28th, but I grabbed 30 of these at 13 cents. And you could see here, it wasn't really at the bottom, but then the market was starting to move. So I said, okay, at least I'll take the equilibrium. I think at that time, some of the other ones closer to the money were actually starting to move. So grabbed 30 of those, sold out at like 17, and then it ended up going even more. But that was another play, closed out of that one, and then just took profits here on these Boeings. They're going to have pre-earnings, but remember, we bought these as one of those lagger plays. They're up now like 250%. Remember, they were very slow at first, but sold half, got my money back, but still got to hold a little bit of these. And then I did grab 100 of these Merck puts for April. I forgot about this play, but they had some news there on Friday, but I like that these premiums were actually cheaper than the last couple days. So Merck's kind of been defensive, but you've seen how some of those other names slipped up there, so I thought this one would be decent. But those were the main plays, as you probably see there. I went for a couple of puts, or only puts there on Friday. I did grab one of those Tesla calls, but for the most part, it was trading some of the movement here, and if that's what we see tomorrow, that's exactly what I'm going to be doing. But don't forget to at least take profits and just play it small. Again, I have made bigger plays that got washed real quickly, so I'm liking the smaller approach here, especially with the volatility, because if you do hit and it does go crazy, it's still working. But the idea here is just still not get caught up in too worse a premium. But then if we don't have any options, just know how to snipe for the best one, or just sit out until we get more confirmation. So those are the main plays. As far as everything else, going to be watching Disney as well as the big tech, Apple and all that, but I'm still holding that play. We did make the calls, but watch out for their earnings. That one could be good. Again, don't forget about Netflix. They could still have a 2-day reaction tomorrow, so I'm going to be looking out for that. Boeing, they're starting to come down. I really think for earnings, this one will be key. Now, all of a sudden, the premiums have gone crazy, so watch out how that plays. IWM, you saw that play that we made on Friday. These ones are willing to move, and they're at a very interesting level. Again, the IWM chart looks just a lot different than your S&P or anything like that, so keep that one in mind. But then watch them. And then IBM, I like this one too. This one could have a lot. Again, if you haven't seen the IBM reports, I mean, if they do bad, it could really affect some of these Dow moves or the value names. Again, look at towards the end of the year how they move. They got a lot of strength, so watch out for them. Same thing with even 3M, Apple. We just need to watch how the safe havens do. I will be watching O and the REITs this week, depending on what we get for the Fed or even earnings. This creates a buying opportunity. Again, I am looking into all of the REITs here. I'm using O as kind of like a gauge, but I really like that one. Altria as well. I got out of that one leap. It was acting a little bit weird. I was a little bit worried if we get more risk off, but if you see Altria hold up some of this dominance as a value play, they could really be a good one. We did not make a weekly play on them last week, so maybe we could find another one. Abivi, they got some news or FDA approval after hours, but they were a little bit weaker here. Watch if they do slip up again, depending on what the market does, but we still have those plays. I'm still going to be watching them. And then Kohl's, like we said, they held up last time, or they were able to move during volatility because that buyout stuff, so I think that could be a really good piece of news. Going to be watching out for that. Amazon down 50% on that big play. I already lost like $2,000 on it, so we'll see if they start to come back to life, but they have already flushed again back-to-back 5% days, but watch how they hold up. And then Tesla, their earnings are going to be key. I think both ways on this one. It might be expensive, but I don't know if it'll disappoint. We will see what happens, but we'll at least see the pricing and option moves coming into the earnings. And And then finally, TLT and the dollar, like we said, we are just waiting to see which way the market is going to respond to Powell. I don't know if we'll get an early signal. The fact that it's holding up here, it may not snitch, but the one thing is things could get worse, but you've already been here before. So just zoom out the chart and think about what we've showed you over the past. Remember when we started to break these levels and then get down to here and we said, watch out, that's when the market freaks out. Well, same thing applies here for the low. Essentially, we can go a lot lower here on TLT, but I don't think it's going to cause the next level of freak out until we get below this like 132, and then that's where your yields start hitting 2% on the 10-year, and then people really start freaking out. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, keep that conscience clear, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.